Look, I know filing your taxes is not the sexiest thing in the world, but it should come to no surprise that it is something that you have to do. If you earned any kind of money last year, then pay very close attention because you likely have a filing requirement. And what kind of money am I talking about, you ask? I'm talking about employee wages, business income, partnership income, S-corp income, realized investment income, fringe benefits, royalties, virtual currency, rental income. The list goes on and on. So if you have any of that and still haven't filed your taxes, don't worry, this video is just for you. I'm Crystal A, CPA, and I will break down what you need to do in order to file your taxes correctly and on time this year. So let's get started. First things first, the filing deadline is April 18th this year. Usually it's on April 15th, but since that falls on a weekend day, the IRS pushed it to Monday. You want to make sure to get your return filed by this day, and if you don't, there are a few consequences to this. For one, if you owe taxes, the IRS will eventually send you a letter demanding the taxes owed, in addition to interest and penalties for missing the deadline, which could be as high as 5% of the unpaid tax balance. Secondly, if you're due a refund, the IRS is not going to just send it to you if you don't file. Plus, once you eventually file, the IRS is not going to add interest to the refund they owe you. So the sooner that you file, the sooner you have your money in your pocket and it can work for you. Now, if for any reason you feel like you can't file by April 18th, make sure to at least file an extension. This will give you an additional 6 months to file your return, but it does not extend the time you have to pay your taxes due. So submit a payment of your best estimate of the taxes you'll owe and also submit that extension on time by April 18th. So with all this in mind, let's talk about how you can get ready to file on time. The first thing you need to do to get ready to file your return is gather your personal information. The most important part of your tax return is reporting you and your family's information correctly. Specifically, you'll need their birth dates and social security numbers. You also need to know your correct filing status, whether that be single, married, head of household, etc. If you're claiming dependents, you'll need their birthdays and social security numbers as well, and you need to confirm that you are the only one claiming them on your tax return. Now, for my wage earners, your employers should have given you a W-2 that shows all of the income you earned and taxes withheld last year. Do you have that? Well, good. You'll need it to prepare your taxes correctly. Now, whether you or someone else is preparing your tax return, always double check the line item on the return that it is showing the correct amount from your W-2. You don't want to underreport because if you do, the IRS will send you a letter and you may owe additional taxes. And you definitely do not want to overreport your income and pay more taxes than necessary. Next, if you own a business or a side business that is not a C corporation, you have to report this income on your tax return. Hopefully you filed your partnership or S-corp return by their due date of March 15th, but even if you didn't, your business returns must be filed first in order to file an accurate personal return. Now, in order to file your business taxes, you need to make sure your business books are in order, meaning you have some kind of report or spreadsheet showing the total income your business earned and the expenses incurred last year. Most business owners make sure to do this throughout the year so there is not a huge rush at tax time. But if you didn't, don't panic. There's just enough time to get this done. You would just need to add up the sales deposits your business had. Sometimes your customers or clients may provide you with a 1099 form, which shows the total they paid to your business. Include these amounts in your total business income. Then go through your bank statements and put your expenses into categories and add up the totals of each category. Some business categories could be advertising, office rent, licenses, travel, business meals, and so on. Once you have this information, you should be able to get your business return filed and report the income from your business on your personal income tax return. If you are taxed as a sole proprietor, however, there is not a separate business tax return that has to be filed first. You'd still need to have your business books done, but you would report that income on Schedule C, which is a form that simply gets attached to your personal return. If you're an investor who had realized gains or losses last year, you need to report this as well. Realized gains or losses are a result of the sale of investment securities. So usually there is almost always a broker involved who would mail you a 1099-B form showing the details of your investment transactions. If you do not receive this form, try logging into your investment account and check your tax forms. If it is not there, you will need to call the broker and request it. Lastly, for income, just make sure to think about all of the ways you made money last year and gather your information, such as alimony you may have received, Social Security benefits, retirement account distributions, and other miscellaneous income like gambling winnings, scholarships, or unemployment income. Now you'll want to consider your adjustments to your income. These are your deductions, and you should gather all information regarding them. Examples of some deductions are student loan interest, mortgage interest, traditional IRA contributions, and medical savings account contributions. With deductions in mind, you'll need to decide if itemizing or taking the standard deduction is more beneficial for you. For most taxpayers, taking the standard deduction is perfect since it usually is higher than itemizing deductions. The next consideration when filing your taxes is possibly maxing out your tax-advantaged accounts before the tax deadline. For accounts like IRAs and HSAs, you actually have until the tax deadline to make contributions. And these contributions can be used to reduce your taxable income and ultimately your tax bill. Next, you should think about how you'll pay the IRS if you do owe taxes. If you use a tax software or even a preparer to do your taxes, there is usually an option to add your bank account to automatically pay your taxes due. If you don't plan to pay your taxes all up front, you'll need to first file your return and then shortly after, call the IRS to set up a payment plan. Or if you're due a refund, think about how you'll spend it. Instead of spending it all at once, you might consider using the money to better your financial well-being, such as reducing credit card debt or auto loans, or you might find it useful to build your emergency fund or investing into your future. Whatever it is, you should have some kind of idea of how you plan on using your tax refund to ensure you get the most out of it. And finally, once you finally file your tax return, this would be a great time to start thinking about your tax strategy for your next return. Maybe your tax bill was higher than you thought and want to reduce it, or maybe you were expecting a bigger refund. In either case, it's never too late or too early to incorporate tax-efficient strategies in your financial planning. If you need help with this, I created a 5-hour course to walk you through things like this and the most powerful ways to reduce your tax bill. If you want access to the course, private trainings, and live Q&As with me, just go to mycpacoach.com to learn more. All right, I hope you enjoyed this video and I'll see you in the next one.